Most people have no idea what an ETF is, but here's the thing, it might be the single most powerful investment tool ever created for ordinary people, and by the end of this video you're going to understand exactly what it is, how it works, and why most financial experts agree. It beats picking individual stocks almost every single time. Let's get into it. ETF stands for Exchange Traded Fund. But forget the technical name for a second. Here's the simple version. Imagine you wanted to invest in the 500 biggest companies in America. Apple, Microsoft, Amazon, Google, Nvidia, all of them. Normally, you'd need hundreds of thousands of dollars to buy shares in each one individually. An ETF lets you buy a tiny piece of all of them at once for the price of a single share. That's it. That's the core idea. And here's why that matters. When you invest in just one company, you're taking a huge risk. That company could have a bad quarter, their CEO could resign, a competitor could crush them, any one of those things could tank your investment. But when you own a piece of 500 companies at once, one company having a bad day barely moves the needle. You're protected by diversification. Now, let's talk about the ones you actually need to know about. There are thousands of ETFs out there covering everything from tech stocks to gold to real estate. But for most beginners, 3 ETFs cover everything you need. The first is VOO. This tracks the S&P 500, the 500 biggest companies in America. This is the gold standard for long-term investing. Historically, it returns around 10% per year on average. Warren Buffett himself has said that most investors, including professional fund managers, would be better off just putting their money in an S&P 500 ETF and leaving it alone. That's how powerful this is. The second is QQQ. This tracks the Nasdaq 100, the 100 biggest tech and growth companies. Think Apple, Microsoft, Nvidia, Meta, Google. It's more volatile than VOO, meaning it can go up faster but also drop harder. It's a good choice if you believe in the long-term growth of technology, which most investors do. The third is VTI. This one goes even broader than VOO. Instead of 500 US companies, it covers the entire US stock market. Over 3,500 companies in one fund. If VOO is a large slice of the pie, VTI is the whole pie. So which one should you pick? Honestly, for most people starting out, VOO is the answer. It's simple, it's proven, and it's what the smartest investors in the world recommend for people who don't want to overthink it. Now let's talk about cost, because this is where ETFs really shine. ETFs charge what's called an expense ratio, basically a small annual fee for managing the fund. VOO's expense ratio is just 0.03% per year. That means for every $1,000 you invest, you pay 30 cents a year in fees. Compare that to actively managed mutual funds that charge 1% or more. That difference compounds into tens of thousands of dollars over a lifetime of investing. Here's another thing most beginners don't realize. You don't need to buy a full share. All major brokerages now offer fractional shares, meaning you can buy $50 worth of VOO or $100 without needing the full share price. There is genuinely no barrier to getting started. So, let's put it all together. ETFs give you instant diversification across hundreds or thousands of companies. They have incredibly low fees, you can buy them with as little as $1, and historically they outperform most professional fund managers over the long run. This is why financial advisors, billionaire investors, and everyday people who've built serious wealth all point to ETFs as the foundation of a smart portfolio. If you're just getting started, open a brokerage account, set up a recurring monthly purchase of VOO, and let time do the work. It really is that simple. If this video helped you understand ETFs for the first time, hit the subscribe button. We put out new videos every week breaking down investing, crypto, and personal finance in plain English. And if you have a question about ETFs or anything else, drop it in the comments below. I read every single one. I'll see you in the next one.